Okay, for this video, I wanted to go over a simple tutorial on how to complete the IRS Form 5884 for the Work Opportunity Credit. So this is a federal tax credit that's available to employers here in the U.S. So I'm going to go through the form itself. This is going to be filed with a Form 1120S, so we have an S corporation that's going to be claiming this credit. But before we go through the return and the form and see how everything kind of flows together, I do have one slide with some information and some details on the fact pattern that we're going to be working with. So a bit of background on the work opportunity credit. Now, I'm not going to go into a full deep dive as to how to qualify for this, how to submit the documents to get approved for it. That's a separate video. I'll put a link to that below. But just so we get a bit of background here to get our bearings before we look at the forms, the Work Opportunity Credit is a federal credit, and it's designed to incentivize employers to hire individuals that the federal government deems are part of a targeted group. So this group there's 10 different classifications, and these are individuals that the federal government thinks, based on the data, that it's difficult for them to find work. Okay, and so in order to incentivize companies to hire these individuals, they've implemented this federal work opportunity credit. So businesses can basically reap some additional tax benefits by hiring people in this class. So the credit has been around a while. It was extended through the end of December 2025 under the Consolidated Appropriations Act of 2021. Okay, so it is going to be around a few more years. Now, who's within that targeted group? Well, there's 10 different types. If you look at section 51D1 Cap A through J in the Internal Revenue Code, some of the more popular examples are qualified veterans, ex-felons, qualified individuals that are on the SNAP program, and then other types of long-term family assistance recipients. Again, that's just a list. That's just 5 of the 10 that are on there, but those are probably some of the more popular programs. Now, how much is the credit? Well, the credit is 40% of wages paid to an employee that works at least 400 hours during the year for you, or it's 25% of the wages paid to an employee if they're between the 120 hour and 400 hour year. Okay, so in order to be even eligible for the credit, you've got to hire somebody and they've got to work at least 120 hours for you, right? If it's below that, you don't get anything. Now, there's generally no dollar cap on the credit unless it falls within one of these 2 categories for targeted individuals. So qualified veterans, there is a cap on the amount of wages that are subject to the credit, and there's certain phase out. So the Form 5884 instructions have very good detailed chart that shows how much income do you pay to a qualified veteran and how much is eligible for the credit. If it goes over certain amounts, then you don't get additional credit for those amounts. You just deduct the wages that you paid them as a regular ordinary trade or business expense under Section 162. Okay, so the credit, again, it's really just designed for wages below certain thresholds for individuals in this group, or if you're not in this group. So, for example, in our example, we're going to be looking at qualified ex-felons. Generally, no cap there. Okay, so let's look at the fact pattern, and then we'll go into the forms themselves. So we've got our S corporation here, Fake S Corporation Inc., operating in Florida with 3 shareholders. Now, the company hires 2 convicted felons, so Tom and Jerry, and they were hired within a year of their release date from prison. Now, why is that relevant? Well, part of the qualification for the ex-felon is you have to hire them within a year after they were released, or if they were convicted of a felony but they didn't do any jail time, it's got to be within a year of that conviction. And the idea here is they don't want you hiring somebody that was an ex-felon 20 years ago and has been out of jail for 20 years. Now they're fully rehabilitated and they're immersed into the market now, arguably. So this is not designed to fix that kind of scenario. Okay, so the fake S corporation goes through all of the administrative and red tape. They do the 8850, they do the 9061, they send that to the state of Florida, and so they get approval that these 2 individuals are qualified for this credit. Okay, So now Tom works 200 hours and he's paid $3,000. Jerry works 500 hours and he's paid $7,000. Now the S corporation, the way this credit's going to work out, it's going to be $3,550, and then they reduce their wage expense by the same amount. Why do we do that? Well, it's because the tax code doesn't like you double dipping on things, right? So what we're trying to prevent here is you deducting the full amount of their wages, but then at the same time getting a tax credit for the same wages that you're deducting. Not allowed, right? So again, at the end of the day, this is still beneficial because the tax credits are generally better than deductions, right? Tax credits are dollar for dollar offsets against your tax liability, whereas a tax deduction is just a reduction in arriving at your total taxable income, and then you compute the tax afterwards. So even though you do have to reduce the expense by that amount, generally it'll still work out in favor of everybody involved. Okay, so now let's jump to the form and dive into those pieces. So let's go back to the 5884. So this is the 5884. You can recall we had a breakout, Tom and Jerry, different wages, but also different number of hours worked, right? So the $3,000 of wages paid to one employee was between that mark, right? It was 200 hours of work. And then the $7,000 was paid to the other employee who worked 500 hours. So he was over that 500-hour mark. And so you can see here are the relevant percentages, 25 and 40%. So the total amount of credit is going to be $3,550. On line 3, there is work opportunity credit from other pass-through entities. So if this S corporation was a partner in a partnership that also had a WOC, then it can compute its own WOC for federal tax purposes and tack on whatever additional amount is flowing through to it. Now, the total amount here, line 4, this is going to be the total amount of work opportunity credit, right? So this is reported on not just the tax return here, the 1120S, in a couple of places. We'll look at that shortly here. But it's also ultimately passed through on the K1 to the shareholder, the 1040, and then the individual income tax return would Form 1040 for each shareholder. They're going to report this on the Form 3800, where you report all the different types of business credits that are flowing through to you as an individual shareholder. Okay, so let's look at where this item is kind of flowing through to some of the other pieces of the return. So if I jump up to page 1 here. Okay, so page 1, here's the S Corporation, Form 1120, page 1, right? We got fake S Corporation, its initial year. We got the revenue and all the expenses here in lines 7 through 20. Now on line 8, you can see the $22,450 amount. This is the amount that is net of the credit for $3,550. Okay, so the total salaries and wages that they had for tax purposes initially was that number plus the $3,550. So I believe we have a worksheet. Let me scroll down to that really quickly here. Bear with me one moment. Okay, so here's the salaries and wage attachment. We can see here that the total salaries and wages they had before adjustment was $26,000. Then we have backing out any kind of employment credits that might be applied here. So this worksheet's very nice. It's got a list of a bunch of options. In our case here, we have the work opportunity credit, right? We've completed 5884. The amount of credit we're going to get is $3,550. So we have to reduce our salaries and wages by the $3,550. And it's only the net amount that is ultimately deducted on page 1 of the 1120S. All right. Now, where else does the work opportunity credit show up? Okay, also shows up on Schedule K, right? So this is Schedule K of the 1120S. We can see here shareholders pro rata items that are ultimately going to pass through to the K1s for each shareholder. But down here in the credits section, lines 13, we have 13G, other credits, $3,550, and we've attached a statement so that the IRS knows, well, that's the type of credit that we're claiming. It's going to be work opportunity credit on line 13G for $3,550. And then the $3,550, because it's not a deduction for tax purposes, right? It's a credit. We need an M1 adjustment. So the M1 adjustment is going to be for the $3,550, And so that's going to be reported on line 16C as well as a non-deductible expense. So if we go to the M1 here, the 3,550 is within that number, the 4,075. So 4,075 is going to be the 3,550 plus the non-deductible portion of the meals expense, right? Meals are entertainment expenses. So if we go look at, let's see, here we go. Here's the statement for it. So the Schedule M1 adjustment, right? So expenses recorded on books that are not deducted for the return. We have the Form 5884 credit adjustment, $3,550. And then we have other non-deductible expenses, $525. It's related to the gifts, right? So we have non-deductible gifts of $525. So that's how we're arriving at the total non-deductible expense amount and the total M1 adjustment on the Form 1120S. Okay, so let me go back up to Schedule K, make sure we've covered all the elements there. Okay, so those are all covered. M1, right, we've addressed that. We've got 4,075. That's the non-deductible gifts of 525 plus the work opportunity credit adjustment, because again, we're taking it as a credit, not as a deduction, that piece of it. Then we've got our M2 adjustments down there, right, other reductions, it's showing up down there. And then let's move on to the Schedule K itself for each shareholder. Okay, so this is a 3-shareholder corporation, S corporation rather. So here's a sample of what we got for the first shareholder, John. Taxpayer, he's a 30% owner, so he's going to be allocated 30% of all the items that are flowing through the S corp, right? That's the requirement for S corps, one class of stock. So up here on line 13 for the credits, we got 13J, $1,065. So that is